All right, big changes are on the horizon. A brand new Income Tax Act is coming in 2025. And believe me, it brings some significant shifts. In this explainer, we are going to demystify one of the most critical areas for any business or professional out there, the new tax audit provisions under Section 63. So let's get right to it with a direct question for you. I want you to think about your numbers for a moment. If you're running a business, does your annual turnover cross that 1 crore rupee mark? Or, if you're a professional, are your gross receipts for the year topping 50 lakh rupees? If the answer was yes to either of those questions, then you absolutely need to pay close attention. The new rules under Section 63 aren't just something to be aware of, they are essential for your compliance. So let's break down exactly what you need to know.
Let's start at the very beginning with the fundamentals, the why and the who. What exactly is a tax audit in this new framework? And more importantly, who needs to get one?
You know, a tax audit sounds intimidating, but think of it like a financial health checkup. It's simply an independent examination of your records by a chartered accountant. Their job is to verify that your books are accurate and that you've calculated and paid your income tax correctly, playing by all the rules set out in the law. Now, for those of you who've been around the block with the old tax laws, this whole concept will sound very familiar. And that's because it is. The new Section 63 directly corresponds to the old Section 44AB from the 1961 Act. The section number has changed, but the fundamental purpose is exactly the same. So who exactly is on the hook for an audit? This table lays it out perfectly. For businesses, the magic number is a turnover exceeding 1 crore rupees. For professionals, it's 50 lakh rupees in gross receipts. And don't forget that third category. If you're using the presumptive tax scheme, but you declare income below the specified threshold, you'll also need to get an audit done. Let's just let that number sink in for a second. 1 crore rupees. This is the figure every single business owner needs to have burned into their memory. Once you cross this line, a tax audit isn't optional, it's mandatory. And for all the professionals watching, you know, the doctors, lawyers, architects, and consultants, your threshold is 50 lakh rupees in gross receipts. It's crucial to keep a very close eye on this as your practice expands. Okay, so we know the why and the who, but what about the how? How is this actually done? Well, this is where the Income Tax Act 2025 introduces a really significant and, frankly, a very welcome change to the whole reporting process. Under the old system, it was a bit of a paperwork jungle, wasn't it? You had to file either Form 3CA or 3CB, depending on your situation, and everyone had to file that super detailed statement in Form 3CD. It was a fragmented, three-part system that could get pretty complicated. And here is the game changer. Gone are the days of juggling multiple forms. The new law brings in a single, unified form. It's going to be called Form No 26. This isn't just about cutting down on paperwork. It's a smart move designed to minimize errors, make data processing way easier for the tax department, and ultimately lower the compliance burden for all of us. Okay, this brings us to probably the most critical part of this entire discussion. How do we actually handle this changeover? With a new law kicking in, which rules do you follow and when? Let's be really direct about it, because this is the question on everyone's mind. For the income you are earning right now, in this current financial year of 2025-26, what do? Which rules apply? Which forms do you use? And this slide lays out the answer crystal clear. For the income you're earning in financial year 2025-26, you're still governed by the old 1961 Act. I'll say that again, the old Act. That means you have to use the old forms, 3CA, 3CB, and 3CD, and get them filed by September 30th, 2026. The new Act, with its shiny new Form 26, only kicks in for income earned from April 1st, 2026 onward. This timeline just gives you that perfect clarity. There is absolutely no gap, no missing year to worry about. The law has been designed for a seamless handover. The old Act is in charge right up until midnight on March 31st, 2026. The very next day, April 1st, 2026, the new Act takes the baton. It's a clean break. So now that we understand the new law and, crucially, the transition, let's shift gears and talk about action. What are the key compliance points and best practices you need to have in place? Here is your no-nonsense compliance checklist. First things first, appoint a qualified chartered accountant. Second, timing is everything. Remember, your audit report is due 1 full month before your income tax return is. Third, and this is so important during the transition, make sure you're using the right forms for the right year. Fourth,
Double-check that all the auditor's details, membership number, UIDN, are correctly mentioned. And finally, remember, everything is digital. It must be filed electronically.
Wow, we've covered a lot of ground. So let's just pause for a second and boil all of this down into the most important takeaways from our explainer today. Here are the 4 things you absolutely need to remember. Number 1, new law, same thresholds. The 1 crore and 50 lakh rupee limits aren't going anywhere. Number 2, reporting just got a whole lot simpler. Say goodbye to the 3-form hassle and hello to the single Form 26. Number 3, the transition is clear. The old act is for this year, the new act is for next year. And finally, number 4, compliance is non-negotiable if you want to avoid penalties. Get the right report filed on time. So I'll leave you with this final thought to chew on. Now that you know what's just around the corner, the big question is, are you ready for it? Are your accounting systems, your internal processes, and your teams all geared up for this major legal shift? Thank you so much for joining us. If you found this breakdown helpful, please do us a favor and hit that like button, subscribe, and share it with anyone else you think could benefit from this information. And just our standard disclaimer, this content is purely for educational purposes. Tax laws are always subject to change, so please always consult with a professional advisor for guidance that's tailored to your specific situation.